Hey there, Jedi Traders. David here of TradingFibs.com to bring you the market recap and outlook for the indices for the week finishing up April 22nd, 2016, week 16. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge in the market. See what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, market set here to open in just a little bit over an hour. It is Sunday, April 24th. We are wrapping up earnings season. FOMC coming up, but it was the move of the week, as each week I keep a trading session focus on week 16, taking a look at the three indices, wrapping up 817 ticks and 22 setups. That's right, only 22 setups, waiting patiently for the move of the moves. And where was the one of those? Well, we had a couple of these this week. Nice trending move. That's right. The old adage, as I've been saying all week, is well, it's not my saying, but we tend to cut our winners short and let our losers our losers run. And we don't want to do that here at the Trading Fibs trading room. We look for the winners and we let them run. And whether or not you get on the first bar, second bar, or third bar, or maybe a pullback, it's all about staying in the trend. There was one of our moves this week on the NQ. So, again, not a bad week. It was all about, after Wednesday, Starbucks and Google earnings coming out, sending the NQ flaring down. Please make sure you check out the blog each week for that trading session focus. All right, let's jump right into the indices. And let's get that up here. Give me a second here. There we go. All right, taking a look at the big picture for the week. Price action all around on the three big ones. The YM here, NQ on the left, YM on the other side, and ES right in the middle. Taking a look at the 6-period moving average, the NQ just barely pushing above that there on Friday's session as she comes down and retests that almost 200-period moving average. We thought we saw some support there midweek at the 50-period moving average on a 4-hour chart. Price action, T3 moving average crossing back downside and then breaking through that 50, looking for a little bit of support there on Friday's session and eventually giving it up. So looking downside again on a little bit more than average volume there on Friday's session. Taking a look at the ES price action, 50 moving average, 50 period moving average above the 200 on a daily. Again, ES pretty much holding underneath the 60 period moving average for some time. If you take a look at the big picture on this move, this rally up, only a couple sessions, less than a handful of price action volume kicking above that 60 period, where the drive down had a lot more volume than this drive up. So always a little bit concerning there, but again, ticks are ticks at the end of the day, guys. So if price action is moving and there's no volume, just be aware price can move. That there's no rule in this trader's handbook that says if price action is moving up on no volume, you can't be in it. All right, so big picture ES continues to stroll up here. It's above the 50, above the 200. But again, like back there on April 17th, price action held at the 50 on a 4-hour chart. T3 moving average back to the upside. So for the short-term to long-term holder, as you can see across the board here, we are still in a continuous rally. Again, go back weeks and weeks and weeks and weeks, and there we are, back to mid-February. We've been in a continuous uptrend here on a 4-hour chart, finding support whether at the 50-period moving average, finding support at the 144. So here we are again, revisiting that 50. If the ES were to break the 50 here, the first levels downside I would look for is the 50 and the 200, as those are closer than the, I apologize, the 144 on the 4-hour chart before I start going and finding support at the 50 and the 200 period. 200 period moving average. Again, intraday, whole nother picture. You're looking, always be ready in both directions intraday. That's not the focus intraday. But on a daily picture, the trend continues upside both on the ES and the YM. Still finding support here at the 50 and the 50 and the 200 period moving average on a daily chart. So upper charts up here, daily charts down below, 4-hour charts. With the T3 moving average set on a pullback, pretty much the Big picture since Wednesday, Netflix, Google, I said, come out with their earnings, and obviously there are other indices in that as well. So again, we're still continuing to hold at the highs of 2015. Some breaching those levels, some pulling back. Let's jump right into some of the indices here. Let's take a look at the euro, as the euro has been pulling back downwards. Price action also T3 moving average crossing downside, and 144 coming within a crossover here as well. Taking a look at the monthly picture, euro getting a little bit of a boost. We've been looking at this some time here. Euro is really, if you go back, it's back to the beginning or mid 2015. Price action in the euro has been coming down hard, and we've been just pretty much chopping at the highs here. So looking at some former highs here before price action retraced. Again, we're nearing those levels. So again, looking on a daily chart, but short term, we are definitely in a pullback. T3 moving averages have crossed over back downside, 50 below the 144. Monthly picture still upside, but struggling a little bit here. It's the daily picture that has finally, in a volatility move, has now come downside, and the weekly, though, still holding upside. So there's our euro picture. Moving into the crude. Yes, the crude. Unbelievable picture here. As price action migrating back upwards. Price action T3 moving averages back where we saw the daily gaps. Actually, we jumped ahead of my volume profile, but I'll come back to that there in a second. So again, crude, as we saw. Did I get to the daily? Yes, I saw. Let's go back for a second, guys. I forgot a portion I like to jump into before I get to the big picture. So again, we talked about the daily pick. I apologize for that. We'll go back to the long-term picture here in a minute. Let's go back to the daily gaps. One of the charts that I tend to look at. Again, on the big picture on the four charts here, YM, NQ, and ES, and crude. So let's take a look at the YM. Its price action has been rallying up. We saw the picture on the, we'll see the picture on the Fibonacci, but again, pushing up here to these highs, 17,981. Always keeping in mind that open gaps, one of the key rules, I know this is hard to understand, that 100% of the time, that's right, 100% of the time open gaps get closed on the indices. So what does it say about this market? Well, the YM holding up here at 17,981, which is approximately a 2015 high, and price action with an open gap down below at 656 and all the way down at 838. So that tells me eventually markets will roll back down there. So when I tie the daily gap in with my 4-hour chart, where is the momentum coming downside? So let me jump right back there to that daily big pick that we just started out with today. And you can see here on the YM, as we pull back to this 50, if this YM were to start to break that 50 first level of support on an intraday, then I'll start to look downside to the 144, and then I'll look downside to the 50 and the 200 period moving average. You can watch your volume if that's important to you, but again, as I see price action moving down there, then obviously I don't see a pullback opportunity to the upside. Pullback opportunity to the upside will be once my T3 moving averages cross back over upside. As I know, the big picture is still to the upside, 50 above 144 on a 4-hour chart. It's once the T3 moving averages bounce back upside and start to move crossover back to the upside, then I'll see an opportunity. But if we continue to roll back down, I go to my daily gap chart and I see price action. Taking a look here, reaching the 656 level, which will be the first open gap. Once this market really tries to starts to move down, that will look here in the long-term picture. Then price action, once the daily and the weekly start moving in that direction, I know that there's a higher probability that we're going to come down and close out this 838. So that's our daily YM. Let's take a daily NQ as price action we just saw on the daily big pick. We saw price action here on the NQ coming up on that 200 period moving average. We've already broken after support at the 50, support at the 144, and so I look for the next key levels down, but I'm also looking for, well, what open gaps do I have below? And so 4017, obviously once most of those moving averages start, once those levels, that 50, that 200 on a daily start to break, and that T3 moving average on a 4-hour chart well, we already saw that. Let's go back. the T3 moving average on our downside, but once that 50 crosses that 144 and I go red here, then I know I have a higher probability of coming down and closing down that 40.17. If price action holds up here as we see it has been holding, then I know that we'll come up and grab these upper levels, 45.80 and 643.50. So again, we can go ahead and close out that open gap as we went ahead and closed that this week. And so that's open gap here from about the beginning of April has now been closed. All right, let's jump right into the daily ES. Again, we can see price action with open gaps down below as low as 1851.75, 2058.50. Again, the NQ closed out its gap. The ES yet to do so. And as we can see from these levels of 2015, high 2086.25 and 2093, still levels that obviously we've already breached and reached and closed. So any pullback, go back to your daily big pick. Taking a look at the ES, if we break that 50, we break that 144, if we break the 50 and 200 period moving averages, then I know that daily gaps will eventually come down and close out 1851.75. But again, as a daily big pick, I know that I'm still in an uptrend. I'm looking for opportunities. Again, intraday, whole nother big pick. But when you're looking for any S&P 500 stock to be back in a rally, it can apply to any chart, any time frame. You're looking for the pullback of the T3 moving averages back to the upside above the 50 period moving average on a 4-hour chart. All right, let's take a look at the crude. The crude again, open gaps up ahead, 45.12. Been loving the crude as it rolls itself upwards. Again, 29.41, still downside. I hate to see crude come all the way back down to close this out, but right now the rally is still staying upside. We have yet to close out 37.90. So again, the short-term pick on crude would be to come back down here to 37.90 and 40.24. But upside, we keep inching up higher. Watch for that 45.12 on the crude as we inch up higher, including the former high back in November, 48.38. We'll go ahead and take a look at the long-term picture for crude there in a moment. Let me jump into volume profile, and then we'll get back to our long-term pictures and outlook for week 17. Again, always keep in mind volume profile, great way. Study up on it. Read Dalton, read Stoudemire. CME's got some great products on it. Again, it's just a big picture for me. It's nothing necessarily to say you might hold off from necessarily taking a trade, unless price action might be right there, sitting intraday at the value area high or value area low. But again, using volume profile, it says 70% of any day's trading existing in a certain location of the trading day, represented here by the orange on each of these sessions. What I'm particularly paying to is price tends to migrate back to its 600-day VPOC, and we have a VPOC downside on the YM here at 17,546, the NQ upside at 4260, and the ES downside at 2060. Taking a look at the crude, still walking up to that upper level, 53.97. So when you take the daily gaps here on the crude of 45.12, 48.38, I also obviously have upper levels as well on the crude. But taking a look at the volume profile again, I have an upper level up here, 53.97, which goes to say that I also have open VPOCs, just as one would consider a daily gap that eventually gets closed. The euro hanging around 1.13 here. That's the 600-day VPOC. Again, you can see the majority of the session, whether we pop above or below it, we're kind of for the last week and a half been hanging around that 600-day VPOC. Again, that's where the majority of traders finding some value. And gold, as gold has been coming off the last couple sessions, or just pretty much chiseling sideways, 1202.8. All right, let's go ahead back to the euro. So now we have the big picture on the euro. We took a look here at the volume profile, and long-term euro again has been downside. T3 moving averages cross downside. Big picture still remains, for the most part, momentum has been to the upside, but watch for that 50-period moving average for support, as we've already broken downside. So the euro, if we were to come downside, which we see the T3 moving average moving already, and we see the 50 crossing the 144, and if we break that 50-period moving average on the euro, look downside to the 200-period moving average to give you an opportunity to enter to the short. Taking a look at the crude now, let's tie in that crude as we just looked, volume profile as we continue upside. We have that in mind, 53.97 up here, 53.97. You take the daily gaps on the crude at 45.12. And then you tie it into crude, which is now on a Fibonacci extension as it holds upside. The next target upside, 47.97. 47.97 playing well into the roll levels up here around the daily gap and just almost at that November 3rd high. So as long as crude continues, again, intraday, a whole nother beast, but crude holding on for the long term, holding around that 200 period moving average. It held at that Fibonacci number 1 level, target number 1, as she continues to crawl upside. We already mentioned the open gaps to the downside that crude will eventually come out and close, but right now look upside to the next target upside, 47.97 as well. T3 moving averages have been holding upside, 50 above 144. We know the daily to be in an uptrend, the weekly still holding to sustaining, the monthly, we know the long-term picture on monthly has been continuously to the downside, so it's going to take a while for crude to actually, in the big picture, change trend. All right, we went through the ES. We talked about the T3 moving average as finding support here at the 50 period moving average. Taking a look here at the daily, the ES breaking below the 5 SMA. As the T3 moving averages have crossed downside and now finding support at the 50, the ES will be back in trend once it pulls back to the upside. Breaks back up above the 5 SMA. Weekly is still in an uptrend, and the monthly now showing progression to an uptrend as well. And if you look at the daily, I don't have any Fibonacci extensions. Again, if today, this last week, that was the last move upside, and price were to retrace, I'll go ahead and pull myself a Fibonacci retracement here, and then look downside to levels of support, including the 50 and the 200 period moving average. So again, momentum-wise, right now, the ES is simply in a pullback, finding support at the 50. As we roll into next week, let's see if price action breaks that 50, and then you want to look downside to the key moving averages, notably down here on the 144 on a 4-hour chart. And if we break that, look to the Fibonacci levels and support maybe around the 38% retracement. Jumping into gold, as we see price action on a Fibonacci retracement coming around that 23% level on a Fibonacci extension. If we continue, if gold manages to get itself back up high, target number 1 up here, 1327.10 on a daily. Taking a look at the big picture on gold as T3 moving averages have now come downside and on a 4-hour chart have broken to the downside with price action 50 still holding up above the 144. Daily struggling a little bit but still holds upside somewhat for the last 4 days here in the green, but daily on a volatility breaking downside below the 5 SMA, so not a lot of confidence that we might hold up here. We would definitely have to break back upside above the 5 SMA to continue the trend that we have been for so long, which we see here on the weekly. Weekly just sustaining itself pretty much sideways. So gold, a tough one to call, but again, you want to watch the 4-hour chart, and then as well, every day, intraday, you are ready in both directions. Take a look at the NQ as we saw back there in the daily gap. We have daily gaps to the upside on the NQ. Let me go ahead and remind you of those once again. There we are. We have the open gaps up there up ahead. We have a huge open gap down below. But when we take a look at the long-term picture, we see that the T3 moving averages this week came downside with a little bit of a push up at the end, but we are underneath the 144 on a 4-hour chart, so it's going to take the T3 moving averages to cross back upside to regain that trend that we have here on the weekly already, all the way on the right-hand side. And the daily right now, we'll see if it finds support down here at the Kiwi trailing, but T3 moving averages on a daily have now come down and crossed over. So taking a look at the Fibonacci levels, price action on a fib extension, just above fib level number 1 as it holds above the 200 period moving average. If we are able to, that's right, if we're able to cross those T3 moving averages back upside on a sustained rally that we've already had on the 5144, let me go ahead back and show you that in the bottom left hand corner right here. The 50 has been above the 144 in this rally since February. T3 moving averages are able to come back upside. Then we'll go ahead and grab that 46.99.50, which is pretty much in tow as we move up to some of these levels up here of the open gaps from back in January. So there's our long-term picture on NQ. Right now, the momentum sitting more to the downside than yet to the upside. Long-term YM, last market to look at. Here's price action right now. No Fibonacci extension. Price just managing to get up to these former highs. Here we are. If this were the last price, 18,085 on the YM, were to hold, I'll look for the 23% retracement downside. Look to the 50 and the 144. What will tell me that I'm coming down that far? Keep in mind the daily gaps in the YM. Let's go back to the YM that we saw here earlier. That's right. We have an open gap down here at 15,838, but our first one at 656. So what would lead me that this week? Well, if the YM breaks, that's right, breaks that 50, look for the 144, including the open gaps down below, and on a Fibonacci retracement, keep that in mind, 23% retracement. So let me go ahead and get that level again, 656. So you go ahead and you draw yourself a line at 656. Come over here. Oh, that's good enough. 654 right there, and just below the 144. So good probability if we're going to close that gap. Price action is not going to hold up at that 50. What's going to tell me that? Well, the intraday session will tell me that, including the T3 moving averages that have crossed back to the downside. All right, so once again, big recap here. Daily pick is still holding upside above key moving averages. T3 moving average on the NQ has been coming down, so watch for the pullback either back to the upside. Again, the momentum is still strong to the upside in this rally on volume that's just been about that 60-period moving average, if anything, under par. But look for those moving averages to hold. If they break down, intraday session will lead, and then the bigger picture will follow as unable to hold up on these 4-hour charts. All right, taking a look ahead every week, you want to make sure you check out my blog here at the Market Cap Leaders, where you'll find a recap today's video as well as the weekly supplemental technical momentum outlook, again with a new look coming this week, covering markets from the futures to the ETFs, industrials, FX pairs, and total stock market. Again, you can find that by simply clicking on the link here, and it takes you to right now a 90-page document that's mostly filled with charts, but again a little bit of each industry, and then technical momentum where each where the trend sits now. Again, you always want to make sure that you're watching intraday for an entry, and then as long as the market is still moving to the upside, you look for pullback opportunities, knowing that there might be, whether it's a stock, an option, an index, you might be able to get a foothold on an early entry. So again, check out the technical momentum supplementary every week here at Trading Fibs. All right, taking a look at this week, big earnings coming out. We got Apple and Facebook, just like last week. Market cap leaders move that market. New home sales on Monday, but it's FOMC on Tuesday, followed by the media announcement on Wednesday, and then following on Thursday with GDP. Again, not too many Fed speakers up for the week. All right, that concludes an insight into the state of the indices and the futures and the overall market. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My trading mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts, and as always, leave your bias at the door when trading. Have yourselves a blue zone day, good night, and good trading.